Okay, I've been trying to get around to my updated forecasts and I've been working on them, but they did take time. On top of that, as usual, there's been so much going on with Tesla and Elon that I also wanted to talk about that, which makes it hard to find the time. But with what is going on with the stock price at the moment, now Elon has been selling his shares and Tesla's stock price dropping considerably as a result, well, I thought we need to gather some perspective, as there's a chance it might be a rare opportunity to buy the dip. So let's begin. Now, this is going to be what I see as the most realistic case. Based on everything we know at this date, I will do a revised version of the Q4 estimates once we have the delivery numbers sometime in January. The earnings report will likely be towards the end of January, so if you're looking at call options, then I would suggest February might be the way to go. This is what I've already purchased and might likely even buy some more this week. I did also buy a One Leap's contract so far as well. As usual, to stay up to date with my trades in real time, you can follow me there on Twitter, and if you wanted to ask me for individual specific advice, you can join me on Patreon. Okay, so let's get started with these numbers. So first we need to work out what the deliveries were. For Fremont, in Q3, there were about 9,000 Model S's produced. This quarter, I think Tesla may have ramped up to perhaps 13,000 Model S's and possibly 4,000 Model X's, giving a total of 17,000 Model S and X's. I think it could possibly be higher. It's hard to know with what level of ramping we're seeing. However, I would say that these models get priority parts, namely chips, because each vehicle is so much more profitable. The S could have even been ramped up as far as 15 to 20,000 run rate at a possibility. Now, Model 3 in Fremont was low in Q3, down about 10,000 units from Q2. I believe this was due to the transition of the standard range Model 3 going from nickel batteries to iron batteries. Therefore, we should see that back up to 50,000 units of Model 3 for the quarter, but the standard range would no longer be battery constrained by 2170 batteries, so it's possible the production level is also up a bit from the Model 3, depending on the chip shortages. As for the Model Y, let's just leave it where it was last quarter at around 60,000 units, giving Fremont a total of 127,000 units. We might lose a few days to what with it being over Christmas. On the other hand, Elon does seem to push Q4 as hard as he can for the end of the year, and Q4 is always the best year for vehicle sales. Now for China, I've recently done a video on the October numbers. We had 54,000 vehicles from Shanghai, but the major thing was Shanghai production was down for a whole week, despite these numbers. When I did the maths, it meant that they were producing about perhaps 1,466 Model Ys a day, using our metric of 800 Model 3s a day. Personally, in addition to that, I think there may have been some lost production time on the stopping and starting of the production line again. And I also think that perhaps the Model 3 was slightly under 800. In other words, Model Y is probably over 1,500 a day, but we'll use these numbers we worked out. That gives us 54,000 for October, so we need to estimate November and December. For Model Y, in November it has 30 days, 1,466 a day works out at 44,000 Model Ys, and Model 3 at 800 a day would be 24,000 for November, and then 45,000 for December for Model Y, and 25,000 for Model 3. Now, when I total those numbers up, I hope you're sitting down for this, it comes in at 192,000 for Model 3 and Model Y deliveries for Shanghai for Q4. But perhaps this doesn't factor in downtime, so let's just scale it down a little to an even 180,000, 65,000 Model 3s and 115,000 Model Ys, taking the grand total of deliveries for Q4 to 307,000. Right, I have been saying Q4 could be big, up 25,000 from Q2, and perhaps somewhat of a diluted result too. Next we have to work out the average selling price, which we have to adjust a bit as we know Tesla's prices have gone up somewhat. But this is not overly simple, as it's not just about what the prices were in the Q4 when they're delivered, but the prices of when the customer ordered. And if you recall, there was still a reasonable waiting list back then too, hence why all the prices have risen. But I think it was only the long-range Model Y from Fremont increasing $1,000, not quite the make or break, so that's all we're going to lock in. Anyway, as the spreadsheet is already a template, we can feed these numbers in and we see an increased revenue in auto sales of $3.5 billion. I've also included FSD as well. I'm increasing profit margins slightly due to price rises, lower costs, and more Model S and X sales to 30%. We'll just replicate last quarter's energy and other sides of the business. There is no way of working these out, and they're inconsequential anyway. With that, we're at a gross profit of nearly $4.8 billion. That is up 27% from Q3. I decided to increase SG&A an extra 100 million or so, as it has likely increased, but we also have restructuring. Well, last quarter, this was a loss of $23 million due to Bitcoin crashing. However, Bitcoin recovered. and this is now going to be an increase of $767 million. Now, as far as I can tell, that now means income from operations will be $3.8 billion, which is an 85% increase from Q3. That feels too good to be true, but I can't see where I might have gone wrong. All the numbers look right to me. Moving on, just copying interest from last quarter, not a big deal, and I'm increasing tax over 85% in correlation with the increased operating income. Okay, and here's the part we've been waiting for. The net income comes in at $3.2 billion, up over 170% from Q3, over 2.5 times more profit, quarter over quarter. Granted, about $750 million of this was a discrepancy between Bitcoin valuation. FYI, I only took a $48,000 value of Bitcoin. The low of Q1 will be even higher. Bitcoin might hit 100,000 next year too. The price of Bitcoin is actually suffering a little bit currently due to what was included about crypto on the infrastructure bill. This then gives us a GAAP EPS of $2.70. Let's just do some more math to calculate further what this means. Starting with annualizing these earnings, it takes it to $12.8 billion net profit for the year. Market valuation at the time of this video is $1.08 trillion, which would make it a PE ratio of 84. Now, this is not a trailing 12-month PE ratio, but an annualized PE ratio of this Q4 estimate scaled up for the year. Now, in this humble YouTuber's opinion, that's still a bargain. I knew it was going to be a good quarter, but to be honest, I didn't expect quite this good. Now, this is somewhat of a bull case, if nothing too much goes wrong. On the other hand, I did scale back China slightly for potential downtime, so I think of this as fairly realistic. But if you'd also like me to do a more bear case, then let me know in the comments. And if enough of you do, I don't mind going through that. The hard work has already been done, and sorry it took so long. There was a lot to go through, and I'm sorry I couldn't have got this out sooner when Tesla was back in the 900s. On the other hand, at the time of this video, Elon is still selling shares, so it could still dip a little again. To be honest, I'm amazed at just how strong the stock price is holding, despite all the selling and the accompanied FUD, such as Elon selling all of his shares and Berlin not opening, etc. I think this means that as soon as Elon stops selling, then this stock will bounce back to all-time highs, as there's also been a lot of positive news at the same time. A lot of people think this is just investors consolidating and the stock price getting frothy. Well, I disagree. I think it was finally coming to where it should be, after being held back most of this year. But it may take Texas or Berlin opening to put us back to all-time highs, assuming those events occur before we get the Q4 deliveries and earnings, which should equally take Tesla to all-time highs. Remember, when I talk about the stock price like this, it is ceteris paribus. There can always be unforeseen macro events at any time, or even issues Tesla might face internally. As always, investing is not without its risks. Having said that, when Berlin and Texas open and earnings are out, I honestly think the stock could be over $1,500. As huge as that sounds, well, that's still only a PE ratio of 117 with our annualized Q4 estimate. Put it this way, when Tesla matures, it might have a PE ratio of say 30, implying just 3 times more growth, and it's mature at these prices. Well, we have new factories that have 4 times current capacity. That means 4 times more turnover, but it means even more times more profit. Added to that, bear in mind these factories make cars at less cost. Added to that, the OPEX will remain around where it is and eventually even dwindle when there is less to depreciate. Add to that, well, the prices of these cars have also increased. So maybe when these factories are at capacity, then earnings might be up tenfold just for the auto business, which would mean Tesla would be at a PE ratio of 10 given today's stock price, and this might be sometime in 2024. Now, this is how I value a company, but I very much look forward to all your thoughts in the comments below. This is an incredibly exciting time and opportunity. I bought 1 call option and 1 leaps on this dip. Also, let me know if you took advantage on this dip too. I did show everyone on Twitter in real time, so make sure you follow me there if you want to see my trades and tips. And also, if any of you'd like to see a copy of this spreadsheet, I am offering it in one of my Patreon plans. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.